Okay, welcome back to the channel, MegaWhale team. Thanks for tuning into tonight's video. We're going to be taking a look at KDA and doing a full technical analysis and market prediction on this coin, talking about everything that has happened in the past leading up to this point in time and where we think the price is heading next. If you want to find out everything, including our price predictions, stick around to the end of the video. We've got a lot to talk about. So to start with, guys, we do need to go ahead and input some major levels. We do have the 6.2536, or rounded up to 6.25, a major horizontal resistance, which we're going to be labeling as the trigger, and we'll come back and talk about the trigger in a little bit later on in the video when we go through our market pattern analysis. Downwards from there, we have a major support resistance zone. At the moment, a resistance zone was the prices underneath it. That is sitting around 53, so 5.4 to 6.6. Below that, we have another major resistance sitting at around 3.3 to 3.85. We have a major support just below us at around 1.37 to 1.58, and finally a low support level all the way down, as we can see at that base level sitting around, I think, a 70 to 80 cent range. So those are our horizontal supports and resistances. As you can see in the macro right now, we have this massive falling wedge formation where we have two trend lines. We can see, let me go ahead and draw them out over here. Two trend lines, both declining, so both heading downwards, and they're converging as the periods move along. So we have this decrease in distance between the trend lines as time moves along. So we have a falling wedge. And we already know, guys, that a falling wedge is a bullish pattern. It's a downwards consolidation, all right, which eventuates or eventually leads in an upward breakout. Now we can go ahead and do a measured move analysis just to give some targets and jot down some resistance levels of this. We take the point of which we entered, all right, so the entry point to the base first retest. So base first retest, we can copy and paste that over and apply it to a breakout range. Now we're actually not too sure where our breakout range is. If we assume it is anywhere from where we are now, we can go ahead and what we can do is we can draw this trend line along here, copy and paste this trend line, paste it up at that point here, and we can assume that target would bring us to anywhere around this level. So anywhere from about a move up to about, let's go ahead and just flip this one over, from that current breakout all the way to about 600 to a 2000% move up, which is insane if it breaks down below. Obviously, I'm not going to say that is my target, but I think longer term speaking, we could definitely see a price rise to about that $20 range. Obviously, we do have a pretty major psychological resistance at that $20 range. Moving downwards from there, we do have a massive resistance at 6.9. Moving downwards from there, of course, we have resistances around 1240, a little bit higher than 1240, sorry, around 1250. And then we have a various amount of resistances throughout this range, leading upwards to our breakout with another significant around 7. So we have a lot of resistances above us over here, but the main ones I want to focus on are the resistance at 630 and these horizontal resistance support ranges. So looking at the price over here, what we can expect before we do a technical analysis and go over the technicals, just on the market pattern analysis, what we'll be looking for is two things, actually three things. First, we're looking for a break of this descending trend line. So obviously we had a fail over here, a retest. We're looking for a break of that descending trend line, hopefully a retest, finding support somewhere along the support zone, and we can move to create some local highs, and then obviously pushing upwards back into this range. That would be our first sign of strength. We're looking for entries upon this area here. So looking for entries, guys, in this gray box would be the ideal scenario. If you're looking to trade KDA right now, I'd be looking to place entries in this range here. Of course, we have our stop losses below this lower support range, and we have our second entries all the way down over here. I don't think the price could go this low. It might. We never know. We could always come see it. The price retest this lower support. If that happens, perfect buying opportunity. Same applies. Looking for a breakout, finding support this time on this zone before moving upwards here. So just to map it out real quickly with some arrows, let's go to, let's see, where is my path? Always get confused. Here we go. All right. So what we could see, step number one, a retrace back into this range, find a little bit of support, push upwards, make some highs, come back and retest, and a push upwards. That would be move number one. All right. Move number two is exactly the same thing, but we see it occur lower down. So your entry points, regardless of which move occurs, regardless of what happens, would be upon either, if you're risky, if you want to take a little bit of a risk, that breakout, or ideally upon that retest of that support range, either over here or over here. So that is our first entry. Our second entry, of course, like I said, is if we flip over here and break out upwards. Now, for the longer term trend to flip, and we're going to come back and talk about all of this in our technical analysis, but based on the chart, based on the market, on the price chart, we would need to see a flip of this 630 range. So that's why I indicated as our trigger. This is a very high level of historical buying and selling. What we can do, we can bring up our VPVR, which is our volume price ratio over here. We can see that our historical purchasing and selling, so trading volume in general, is the highest around this level. We can see if we clear this peak at around 630, we have this pretty steep slope all the way up to around $9. So we can see a very strong swing up here, all the way back up to that $9 range at that horizontal resistance we indicated on our chart. And guys, that is basically it for the market analysis. We're going to go ahead and talk about our Bitget exchange, and I highly recommend actually signing up to Bitget. It takes about 30 seconds, and I know I've talked about it every single video, but it is my new exchange that I use. It's only got 0.02% trading fees, which is absolutely unreal compared to Binance, which I used to use at 1%. Bitget is just coming out strong. 0.02%, guys, it's unreal. It really is. So we'll take a moment to introduce that and talk about that. If you're not interested, just skip forward into the timestamp to the technical analysis. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. Okay guys, so let's get back into it. We're going to do our technical analysis here and talk about where we think the price is headed. We've kind of already talked about what we can expect the price to do, but through the technical analysis, we're going to figure out the strength of the trend, figure out certain points of breakouts, and how we're looking for the current market price on the larger term time frame and what we can expect to occur on that short term time frame. We've given you a few directions on which the price can take and a few entry points on which you could apply to a trade. Right now, we're going to be taking a look at the technical. So let's go ahead and dive right in. We'll start on the 1 day and we're going to bring up our 50, 100 and 200. And we can see that the 50, 100 and 200, although it's a combination between slower and slightly faster, the 50 is still quite a slow, but it's slightly faster moving averages, indicating that we are in fact in a massive downtrend, which isn't obviously new news. It's very, very old news. We have been in downtrend for very long, but it is confirming again. These levels need to be broken on the larger time frames to flip this macro trend, and there's no surprise that most of these are sitting below this trigger zone. All right, so moving on from there, let's take a look at our Ichimoku cloud. Let's see if the Ichimoku cloud can show us anything. Not really, guys, but underneath the Ichimoku cloud, the conversion line and the baseline is acting as a little resistance here. Obviously, cloud's acting as a resistance, and our lagging span not really doing any favors for us right now. We do have on the 1 day chart, I do want to point out, we do have a horizontal ray we can go ahead and draw in, which is right over here. And we can see a period of 4 support tests. So we have our support test on our lagging span, and obviously that reflects our price over here. If we do clear or drop below this level, we will see a push back downwards either to this level here, which is at that $2 range, or our lower upper 2 range at $1.97, $1.96 range, or a drop back downwards here to where we will find that support and hopefully push upwards and result in a new uptrend, or at least a significant bounce, if not a new uptrend. And I do have to just remind you guys that even if we see a bounce on KDA, a significant bounce, technically we're not really in a macro uptrend until we break over this trigger line. So a lot of people, if this occurs, will enter, make a lot of money. It'll be awesome. We'll make a lot of money on this trade. But we do have to keep our expectations, I guess, in check, because just because this occurs here, it doesn't reverse this entire downtrend. It's not significant enough. So we have to keep in mind that although the trend can be up, it doesn't mean it's bullish, or should I say on a macro bullish or in a bull market. Just because we're in an uptrend doesn't mean we're in a bull market. Just because we go into a downtrend, it doesn't mean we're necessarily always in a bear market. We have downs and ups on macro swings. So taking a look at this price action, there's a lot that needs to occur before we technically flip macro bullish again. But there is definitely a lot of trader setups you can take between now and then, just waiting for a right moment. Let's go ahead and take a look at the bull market support band. Of course, we're going to be under it. Yep, we're finding a lot of resistance over here. We can see a lot of resistance here in the bull market support band. This is trending within the wedge right at the top, and it'd be nice to see a flip of that, and eventually maybe some kind of smoothing out of that as we push over and find it as support. And I just want to pinpoint and just really emphasize that that would be a great entry if we see. Sorry, my eyes are a little itchy. if we see some kind of push downwards of this bull market support band, and we have that price kind of flip below it and push upwards and then retest as support within this range over here, that would be a strong entry signal if we can clear upwards and push higher. We're seeing numerous retests of that bull market support band. If we look on the left hand side of here, we can see how we retest it and push upwards. That is definitely a possibility, but as long as we're underneath it, we can expect its downtrend to continue. All right, one of my favorite indicators, Gaussian channel, very much under the Gaussian channel, not telling us much on the daily. Let's go ahead and take a look at the 12-hour chart. Let's see, 12-hour chart, not much going on over here, still underneath it, trending under. We can trend underneath it for a long time, and we can see how the Gaussian channel is kind of trending alongside this downward sloping resistance of the wedge, and we'd like to see it push over this wedge and the Gaussian channel, flipping it and pushing upwards. Of course, an entry in the Gaussian channel is an entry signal. An entry in the Gaussian channel signifies a move upwards to the top side. Obviously, on the smaller time frames, it is more flaky. On the larger time frames, it is more consistent, more solid. But we usually do see these moves upwards into the Gaussian channel, or sometimes even through the Gaussian channel, depending on the velocity of the trend overall. But according to this, with the descending wedge, if we do get that move into the Gaussian channel on a smaller time frame, with a combination of either a retest, a flip of the bull market support band, or a breakout and confirmed breakout of this wedge, we could see or expect a move upwards into this range. So Gaussian channel is looking pretty good. Let's go ahead and go back to our daily chart. I want to bring up the RSI and the MACD. I don't really like to use the MACD too much on macro trends, just because it really doesn't tell us too much, guys, on the macro trends. It can tell us when crosses are coming, but it's so heavily influenced by the current price action. It can't really indicate points of reversals. We can get some entry points on it, so I can show you an example. Let's bring up the MACD. Here it is. All right, so on the 3-day, let's take a look. So the 3-day, we'll probably have a cross coming, yeah. So look at this, look at this. So in hindsight, people love the MACD, and I understand why people love the MACD. A lot of new traders will flock to a MACD and trade based on the MACD, but there's certain rules you need to apply, mechanical rules that you need to apply when trading with the MACD. And you can't just assume that every time it crosses, you enter, because crosses can occur and they can flip the other way pretty rapidly, and only in hindsight do they look very accurate. What I like to do personally is combine the 200-day moving average with the MACD, and I utilize these two together, and every single time we're above that 200-day moving average, I'm looking for positive flips on the MACD's entry, and obviously you don't have to use this on a 12-hour, you can do it on a much smaller time frame. Sorry, my eye is very itchy. There we go. All right, so we can go to like a 4-hour time frame. I can show an example. All right, let's look for a MACD cross. All right, so here's a MACD cross over here. So we have we're looking for a combination of a positive cross. Here's a perfect example. We have a combination of a positive cross, which means the MACD is crossing. So we have that cross, but it's above that 0-point line. All right, so it's positive, and we have that combination of that 200-day moving average break. That would be a perfect entry signal according to a MACD on a smaller time frame for a swing high. We saw that, a swing up to our next resistance, perfect trade. All right, so mechanical rules are important when you're using the MACD versus a momentum indicator. So we don't want to be using that alone, particularly when we're I would say analyzing macro trends. If you're relying on the MACD, you're not really giving yourself the best shot at predicting the trend, just because of how much it can be altered by rapid price movements. We can see a MACD cross about to happen, and then all of a sudden the market crashes, and then it just flips the other way, and you've entered a trade waiting for that cross, and it never happens. What I prefer to use, guys, is the RSI, and I think the RSI is an excellent indicator. I'm going to show you over here. Let's take a look. I haven't actually looked at this chart besides, I don't really look at my charts beside the videos. Well, for videos, of course, that we're filming, I kind of go in fresh to analyze it with you guys. But if we go ahead and pinpoint some levels on this RSI, and we can kind of draw some lines down, and we can see over here a prime example. So let's go ahead and analyze this. We have a descending trend line on the chart. We have a descending trend line on the RSI, and we can see points of clear resistance. So points of clear resistance over here, which indicates this resistance level over here. We have a very clear fail, so a resistance over here, but no momentum break. The momentum didn't push up, didn't break a resistance. It wasn't significant. It didn't really do anything. So we didn't really have any entry signal there according to the RSI. We had this, again, resistance on the RSI, nothing significant. This time it was the reverse. We have this failure to break even upwards and push. We have this divergence, as you can see on the RSI over here, and that is a bearish divergence, guys. So pushing downwards. So moving forward, we have this breakout on the RSI, but the price doesn't break out, we have this fake out. So we have a fake out over here. That's how we can use the RSI, guys. Really, really beneficial tool to identify fake outs like we just did. And then finally moving down over here, we have more resistance on that RSI. And once again, the price hasn't actually quite reached that resistance. What I can say is we're looking for a combination this time of the RSI break plus the price break. All right, that is something we have not seen since, well, we haven't seen this entire time since October. That would indicate a significant shift in not only momentum, but a confirmed shift in price and momentum at the same time, indicating a reversal in the trend. And it doesn't mean it's reversing the macro trend, it just means it's reversing the trend on the shorter time frame, maybe a 12-hour, 4-hour, 8-hour, which could result in a macro reversal eventually if the trend continues favorably for an extended period of time. All right, guys? Cool, man. I think that's about it. I really hope you guys enjoyed. If you like this content, if you want to see more honest, unbiased, accurate, and expert opinion and technical analysis, consider following, guys. We do pretty much daily uploads. I have been a little bit sick the last few days, so I've kind of tapered down a little bit. But before we finish off, I do want to go ahead and bring up our community question. So let's go ahead and dive right into this. It says, this is from X Crime. Thanks, man, for submitting your question. Really appreciate it. It's always good to answer some new questions, gets my brain thinking a little bit. And I don't really like to review these until I jump into videos, so I give you my honest, uncut, unfiltered opinion and give you a real answer. He asks, what do you think is the most suitable solution at the moment? I assume you're just talking about in crypto in general. Do you dollar cost average constantly during these times and wait for 18 to 12K, and then buy constantly once the trend is flipped? So really good question, and I just want to bring up, let's just put that off to the side, the Bitcoin chart right now, and specifically this chart here. Nope. I always got problems finding my charts, guys. I have way too many charts. Here it is. All right, cool. So he's asking right now, do you dollar cost average on its drop, or do you wait for this bottom area over here and do you buy then? So yeah, you've kind of nailed on the head. We're not really dollar cost averaging now because we expect the price to go lower. The question is, if you have the tools and the knowledge to analyze a chart and predict the trend, and you can confirm these predictions with data, which we have. We've done this many times. We've told you guys, we've told you to sell. We've told you the bear market was in all the way up over here, just retest. We told you 24K was our first target. We reached that. We're telling you now, if we lose this dotted line, we reach 18K. That will happen. We have the data to confirm these predictions. We're not just pulling them out of ours. We're actually giving you guys factual information based off data, based off historical data and price action to give you guys this. So, no, you're not dollar cost averaging now. We predict this to occur. We have the data to support that. Why would you buy now when the price is going to go lower? That is the question. What I would like to say though, we do have trigger zones. So you're not dollar cost averaging now, but if these zones break and we have confirmation in trend, when the flip occurs, then you enter more aggressively. Or when we reach high levels of demand, you enter aggressively. For example, for the Bitcoin chart, if we go back to it, we have either a trend flip at 32K, we enter. All right, we expect to move upwards to the midline of the Gaussian channel. Or we find support down over here, we enter expecting a bounce. All right, so dollar cost averaging, no. Wait for the best entries, yes. Wait for a trend reversal, yes. Dollar cost averaging is on the assumption that the risk asset will increase over time. There's no guarantee in cryptocurrency that prices will increase over time. Do not believe the lies that people like to feed. Just because crypto has gone up for 14 years straight, it doesn't mean it will continue like this forever. There's no guarantee, guys. I'm as bullish as it gets on crypto, but I am still a cautious investor, and I'm still very much aware, and I'm not letting bias or these hopium statements negatively impact my decisions or portfolio. You should always trade with the knowing of the risk. Always trade knowing risk is always there. All right, guys. I hope that answers your question. I do want to end the video by bringing up our one and only VIP channel. And of course, the VIP channel has been absolutely killing it this month, guys. We have close to over 400 members now, which is insane. Let's just go ahead and take a look back at some of our posts, so you can see a whole range of different trading signals, profits over here, awesome, targets, cool. We post a whole lot of updates, technical analysis, obviously other links and our video links, and we go ahead and look at our trades for a month. We can see 95.65 win rate, 23 wins, 1 loss in our trade so far. We have a few actives not quite updated to the current day. That was updated to, I think, maybe 5 days ago. So I've had a few extra on top of there, but I need to update that yet. But guys, if you're interested, all you need to do is head down to the description, so a pinned comment down below, click read more, click the link that says interested in VIP, and just contact me, guys. And even if you not want to join VIP, even if you don't want to fork out money to do that, which I highly recommend, it's unreal how much value I can provide with this VIP channel for the cost. It's unreal. But even if you don't have the money for that, or you don't want to join up for whatever reason, join our free channel. We give you a variety of different stuff in here still, market updates, trader signals, a whole bunch of stuff that is still equally as beneficial, just not as you know, for the more experienced or people who want to take it to the next level, essentially. All right. And finally, our Crypto Academy course has launched. If you're interested in learning how to trade just like me, if you're interested in learning how to do these analyses just like me, figure out trigger zones, demand zones, entries, targets, all this kind of cool stuff, how to adjust trades. We take you from the absolute basics to the extreme advanced within 10 units, 500 slides, 86 videos, a whole bunch of worksheets. You will leave that course, the experience that I have, with the knowledge that I have. Obviously, experience comes with time, but the knowledge that I have, and you'll be able to become a professional trader with that and change your entire life and career. So if you're interested, contact us, link in the description again, cryptoacademycourses@gmail.com. We'll look forward to have you in there and hopefully get you guys changing your life and really learning. So hope you enjoyed today's video. I will see you guys tomorrow morning. We've got a collaboration video with Wolves of Crypto. We're doing a whole Bitcoin market update. We'll go through these charts over here, go through these charts, go for a whole range of charts. We've got a heap of stuff I want to talk to you guys about. It's been a while since we've done this Bitcoin video. So that being said, guys, I hope you enjoyed it, and I'll catch you in the next video.